Welcome back, everyone, to another deep dive into the world of crypto. Today, we're going through the Crypto Market Report from Crypto Deep Dive. The report is dated December 27th, 2024. We'll be sifting through it, highlighting the most important parts. Think of us as your crypto Sherpas,
I like that.
guiding you through all the peaks and valleys of this report. So, first things first, taking a look at the global crypto market cap. It's down a bit today, but trading volume is actually up almost 5%. Now, Bitcoin and Ethereum, they're holding steady.
Relatively.
Yeah, relatively. But there are some interesting developments with altcoins we'll get into later. From international legal battles to geopolitical power plays, even a meme coin burn gone wrong. Let's jump in.
Yeah, what really stands out to me in this report is this pivotal moment we seem to be at in the industry. We're seeing traditional finance giants like BlackRock getting involved in DeFi. Meanwhile, countries like Russia are looking at Bitcoin for international trade. This intersection of old and new is really fascinating.
Yeah, absolutely. And the report highlights Virtual's protocol as a top gainer. It's up nearly 17%. They're making big moves in the DeFi space. But it's not just about basic financial solutions. What's unique about their approach?
Well, they're really focused on bringing real-world assets onto the blockchain. Tokenizing things like real estate, commodities, even fine art. This opens up so many possibilities for DeFi. It goes way beyond just lending and borrowing.
So they're trying to bridge the gap between the digital and physical worlds. That could be huge. Now, on the other end of the spectrum, we have Pudgy Penguins, an NFT project that's dipped in value. But their NFT sales are actually really strong.
Shouldn't those two things go hand in hand?
Not necessarily. The NFT market is known for its volatility. A lot of it is driven by trends and speculation. Pudgy Penguins may have strong sales, but maybe the overall market sentiment for that style of NFT has cooled off, which leads to the dip. So it's not just about a project being successful. It's about the constantly changing tastes of the market. This is a good reminder that even with strong fundamentals, external factors can have a big impact on price. Now, let's turn to some legal news. The extradition of Do Kwon to the U.S. co-founder of Terraform Labs. This case has been a long time coming.
It has, and I think it shows that regulators are getting serious about cracking down on fraudulent activities in the crypto space. But it's not just about punishing the wrongdoers. It might also discourage innovation in the future.
Interesting. How so?
Well, think about it from the perspective of a venture capitalist. They see what happened with Terra Luna. They see Do Kwon's legal troubles. They might become more hesitant to take risks, less likely to fund projects that remind them of Terraform Labs, even if those projects have real potential.
So this case could stifle creativity, slow down innovation. As investors become more cautious, it shows how regulation, while often necessary, can have unintended consequences. Now let's shift gears and talk about Russia. They've decided to start legally using Bitcoin for foreign trade.
This is a bold move. It could have big implications. For Russia, it's a way to get around sanctions and access global markets. But on a wider scale, it really legitimizes Bitcoin as a viable alternative, especially for countries facing economic isolation.
It's like Russia is throwing a Bitcoin-shaped wrench into the global financial system. What are the chances other nations might follow suit, especially those who aren't happy with the current Western-dominated financial system?
It's definitely possible. If Russia shows that Bitcoin can effectively be used for international trade, it could encourage other nations to do the same. This could lead to a whole parallel financial system, with Bitcoin at its core, challenging the US dollar and the SWIFT network.
That's a scenario that's both exciting and unsettling, a potential shift in global power. Now let's talk about Tether, the issuer of the USDT stablecoin. They're getting into venture capital.
Right, their investment in Arcanum Capital is interesting. It's a firm that's focused on building decentralized tech. This shows that Tether doesn't just want to issue a stablecoin. They want to actually shape the future of the crypto ecosystem.
It's more than just putting their money where their mouth is. It's about influencing decentralization itself. What kind of decentralization do you think Tether would be in favor of?
That's the big question. I think they might be interested in what some call permissioned or enterprise-focused decentralization. These are systems that are still somewhat controlled, maybe with certain entities having a bit more influence than others. Not quite the fully open and permissionless ideal that some crypto enthusiasts want.
It'll be interesting to see how this plays out. Now, over in Brazil, they've implemented a ban on self-custodial stablecoins on the surface. This ban is about increasing control and oversight to protect consumers and prevent money laundering.
Right.
But some see it as an attempt to stifle innovation and keep traditional financial institutions in power.
So is it about protecting people, or is it about protecting their own financial interests? It's possible it's both. But the funny thing is, this ban might actually backfire, pushing users toward even more decentralized solutions that are harder to control. Think about it. When you make it harder for people to use stablecoins through regular means, they might be more likely to explore alternatives outside of government control.
It's like damming a river. You can redirect the flow for a while, but eventually the water will find a way around. Now let's talk about a story that shows the clash between traditional finance and DeFi. Frax's proposal to back their stablecoin with BlackRock's BUIDL.
That's an interesting one. This proposal shows how the lines between old and new finance are blurring. It seems traditional institutions are starting to see the potential of DeFi, and they want to get involved.
Okay, but backing a stablecoin with BlackRock's BUIDL sounds vague. What exactly is this BUIDL?
In this context, BUIDL refers to a tokenized version of a short-term bond fund. It's managed by BlackRock. Essentially, it brings a traditional financial product into DeFi, wrapped in a token that can be used on blockchains.
So taking a piece of Wall Street and putting it right into the crypto world, what are the potential benefits and risks here?
Well, the benefits are pretty clear. Integrating traditional products into DeFi could make it more stable and attract institutional investors who might have been hesitant before. But there are risks too. Bringing in traditional finance could also introduce some of the systemic problems that the old system has. It's a balancing act, and we don't know for sure what the long-term impact will be.
It's like creating a hybrid creature, combining the strengths of two different species. You might get the best of both worlds, or you might end up with something unstable and unpredictable. Now let's go to Japan. The prime minister there is being cautious about adding Bitcoin to their national reserves.
Interesting. Japan has been ahead of the curve when it comes to crypto, so his hesitance is surprising. He mentioned the complexities of government policy, but he might also be waiting to see what happens.
He's probably watching El Salvador's Bitcoin experiment closely.
Exactly. Governments have to be super careful when thinking about something like Bitcoin. As a reserve asset, it's disruptive, volatile. There are huge economic and geopolitical implications to consider.
It's like deciding whether to bring a tiger into a petting zoo. Could be a star attraction,
Yeah.
but it can also cause chaos. Now let's talk about meme coins.
All right. The wild world of meme coins.
Always an adventure. The report mentions BONK. It's a meme coin that tried to do a huge token burn, but it didn't go quite as planned.
Right.
Tell us about this.
Well, like lots of meme coins, BONK relies on community engagement and hype. They plan this big token burn to destroy a bunch of tokens and boost the value of the rest. It's a common strategy in crypto, but this time it didn't work out how they hoped. The price dropped instead of going up.
It shows that even in the meme coin world, execution matters. Now, let's talk about the importance of cybersecurity in crypto.
Absolutely crucial. As we saw with the recent hack of Yahtzee, the co-founder of Animoca Brands, no one is immune to these threats.
Even the biggest players are vulnerable. And it's not just about losing money, there's also reputational damage, a loss of trust.
Exactly. That's why it's so important to take a defense-in-depth approach to security, using multiple layers of protection, strong and unique passwords, two-factor authentication. Be wary of phishing scams.
Build a fortress around your digital assets, with layers of protection to keep the hackers out.
And don't forget about social engineering. Hackers can be really good at exploiting our emotions, tricking us into giving up sensitive info.
So it's not just about tech, it's about awareness, not falling for those traps, like a game of chess. Now let's talk about something a bit more positive. The Bitcoin options expiry event.
Right.
Billions of dollars worth of options contracts expired, all in one day. It could have been chaotic, but Bitcoin actually stayed pretty stable.
Yeah.
Stable being a relative term, of course. Even a small change in Bitcoin's price can mean big wins or losses. 5% swings can still be significant.
True. What looks stable from one angle can be a roller coaster from another. But this event was pretty calm, compared to the past at least. It shows that the Bitcoin market is maturing. It's getting more resilient.
Good for long-term investors who want stability. Speaking of long-term, let's talk about Lido DAO, a staking platform that's been making headlines.
Yeah. Lido is a great example of how staking is gaining traction. People are using it to earn passive income from their crypto. You're essentially putting your crypto to work, supporting the blockchain network, and earning rewards.
Sounds good, but isn't there a kind of contradiction there? Locking up your crypto for staking, when the whole idea of crypto is to be your own bank, having full control.
That's a good point. Staking does mean giving up some control in the short term, but the potential rewards are often worth it. It's a trade-off. Control versus opportunity.
Like choosing between keeping your money in a safe or investing it in something that could be profitable. Both have their pros and cons. Now let's go back to Brazil's stablecoin ban. We talked about it before, but I want to dig deeper into those unintended consequences.
Sure. As we said, this ban might actually push people towards solutions that are even harder for the government to regulate.
That's a bold statement. What makes you think that? It seems counterintuitive, a ban leading to more activity in the area they're trying to control.
Well, history shows us that when you restrict something, people find ways around those restrictions. And with crypto, this could mean a surge in decentralized stablecoins, privacy coins, things that operate outside the traditional system.
Like a game of whack-a-mole. You try to push it down in one place, it pops up somewhere else.
Let's move on to another story about regulation versus innovation. BONK's token burn. It didn't go so well.
Right. It shows that even in the meme coin world, where it's often all hype and speculation, actions have consequences, their failed burn hurt their reputation, and probably scared off some investors.
A lesson in transparency and follow-through. If you make promises, especially with people's money, you have to deliver. And speaking of delivering, let's talk about the hack of Yahtzee account.
Yeah, a major security breach. Even someone like Yahtzee, co-founder of Animoca Brands, can be a victim. It shows that no matter how much you know, there's always a risk. So what can our listeners do to protect themselves? We talked about strong passwords, two-factor authentication. What else?
Well, one simple but effective thing is to be careful about what you share online. Don't post details about your crypto holdings, transactions, or even your general interest in crypto on public platforms. That way you're less of a target for those social engineering attacks.
So be discreet. Don't make yourself a target.
Right.
Out of sight, out of mind.
Exactly. And if you have a significant amount of crypto, think about using a hardware wallet. They store your keys offline, much harder for hackers to get to, like a digital vault.
Sounds like good advice. Well, that brings us to the end of our deep dive into the world of crypto. We've explored the trends, the challenges, the opportunities, and the potential impact of this incredible technology.
Thanks for having me.
And to our listeners, stay curious, stay informed, and stay engaged. The future of finance is being written right now. Until next time, happy crypto exploring.